I am not a geopolitical analyst. I am a trader and I look at charts a lot. And I've been watching S&P Futures gap down from about 69.60 and now it's falling even further down before opening negative 1.36%. That only happens when bad things are happening. Now, again, I don't claim to be an analyst. I'm not going to say everything there is to say about Greenland or tariffs, but I know that the market remembers tariffs. There's still probably a little bit of sting left. For those of you that are new, the last time we got some tariff fears, we initially went down 1.75%, and that started a massive landslide that led us down 20% into a bear market. And there are plenty of signals that have been flashing for a while that we should be leaning into a bear market. One of them is gold. Gold is a very safe asset that continues to push up higher and higher. It also has a gap here at 46.20, but you have to understand that the only reason for gold to pump the way it is because lots of things are breaking really fast. But this does not mean that gold will go up and to the right forever, no matter how much Peter Schiff might want that to be. And it's not just gold and S&P futures, it's also Bitcoin getting very dangerously low where it could actually break our support level. And it's not even that either. It's the yen that's going out of control, which is also having a negative effect on the Nikkei, which also seems to be crashing. Plus, it's not even just Japan. It's also the Shanghai Composite. It's also the Hang Seng. Everything feels like it's literally hanging by a thread. I'm going to do my best to show you what the charts are saying, aside from what all the commentators and all the politics are going to say about it here on More Coin Bureau. What's up? My name is Aaron Dishner from the Better Traders. You're watching More Coin Bureau. We're going to get into it right away. First, we need to start with S&P Futures, and we're not going to go to the daily time frame because the daily time frame is going to fluctuate a lot over the next couple of days. I need you to see this on the weekly though. The reason why the weekly chart is so great, we're going to hide these indicators for now, is because it gives us a zoomed out picture. Now, without any indicators whatsoever, we know we had a really, really big drop because of tariffs and the fear of tariffs. But we also had an incredible V-shaped recovery. We've seen so many of these V-shaped recoveries. But the problem with a V-shaped recovery is that eventually it's going to top out, it's going to lose strength, and it's going to go lower, which is exactly what happened during this period in 2022, 4 years ago. Now, I'm a big Bitcoin 4-year cycle believer. I believe Bitcoin is going into bear market. I've already explained why I think that's happening, but I also expect the S&P to do that as well. One of the main reasons, now looking at some indicators that are free, not proprietary, but free, weekly RSI, the relative strength index, has been on a massive decline ever since its high back over here, 2018 January. Okay? So we're seeing lower extreme highs, lower. Not a terrible thing. This is normal, especially when we hit an extreme high level. But think, what else was pumping super duper crazy in December 2017 and also into 2018? Bitcoin and everything else. And notice what we also have over here, a crazy rally in January, and then we have a massive dump because of COVID. Okay, and then we get a nice rally over here in March 2024 for the S&P, a little bit here in July. We also get our election pump, kind of, sort of. Now, I want to go over here, though, because I need you to understand something really simple about RSI. The relative strength index is fantastic. It's doing two things, telling us when an asset is overbought or when it's oversold, but it's actually bigger than that, because when we pay attention to the trend, a downtrend, sequentially lower highs, that's showing us loss of strength. I'm not a big bear at all. I like when prices go up, but we cannot deny the fact that for S&P Futures, it's been going down for quite a while. And this actually plays over well with gold. Now, gold is the one outlier because we had this massive high over here on the week of the 13th of October when it went up to 94.19 on the weekly, which is insane. However, ever since then, we've been seeing lower highs. It could still go up, but it's much more statistically likely to fall lower. And you'll notice that there's a pretty decent level of support right here. Why is this such a big deal? If we get any sort of bearish reversal on gold, any sort of one, and it happens to fall down here and it does not bounce off of the support level, but it breaks it, this will start a new bear market trend for gold, which admittedly is massively oversold. And to make matters even more interesting, we can also clearly see the fact that as we've seen these higher highs on weekly RSI, lower highs on RSI, we've seen higher highs in terms of price, which is bearish divergence. Again, not trying to be doom and gloomer, but we also have to pay attention to the indicators and what they're saying. Now, here's where things also get really interesting. The Nikkei as well has been doing the same thing. Don't worry, I'll show what the circles mean in a second. But we've seen a massive spike here back in October 2025. And then we saw now a higher high on the week of the 13th, just last week. And what's happening with RSI? This one's a little bit weaker because we don't have as much data. But again, when we see a higher high, but a lower high for RSI on the weekly, that is a massive, massive tell that something is starting to break down, okay? It's also the Shanghai Composite. It's also the Hang Seng. We're seeing a lot of this weakness forming as well. Bitcoin is no different. The main thing that makes Bitcoin different, Bitcoin is no different in the fact that we've seen RSI falling consistently ever since back over here in 2023, 2024. However, Bitcoin already had a bullish reversal by going oversold the week of the 17th of November. It does not, I repeat, mean that Bitcoin's going to go up and to the right forever. It does not mean that at all. In fact, we know that in bear markets, especially for the stock market, that Bitcoin will suffer even more. So, where do I think things are going? Now we need to start adding in some stuff because I need to build the argument for this. TBT Divergence is a pro-tier indicator available to the better traders, my company, okay? This is a ridiculously easy indicator that lets us know when there is a statistically greater chance of a bearish pullback. We will get lots of these on uptrends, but eventually we're going to get some sort of a bearish response. We get lots of these on an uptrend like this, and eventually when we get these yellow ones, they're letting us know we are now even more asymmetrically positioned to go lower. Even if we have a slight move up, the last time we got some of these, it started the bear market. And I do believe the S&P is heading into a bear market. If we did an exact copy-paste move, get my bars pattern over here, from the top to the bottom, exact move, then we're looking at a possible bottom of $5,600, which would be super duper easy. Totally doable. There's no reason that we have to actually go all the way down here to the lows that we saw because of the fear-induced crash because of tariffs. But I think some sort of pullback, maybe to 20% or so, it would be reasonable for the stock market that's been pretty overheated and it's already shown signs of weakness here. Okay? Now, there's more. Because gold is also flashing these signals and it has been for quite a while. We know things are just out of control for gold. And even for the yen, over here on the daily time frame, actually, we've been getting a lot of these bearish reversal signals, but we know a falling yen is very bad for the market. Hence, the Nikkei is now starting to show signs of weakening. Why? Because the yen is starting to strengthen a little bit. Not really, but we are seeing signs of weakness here. The fact that we're seeing weakness here for the Nikkei, we're also seeing signs of weakness here for the Shanghai Composite. For the Hang Seng, we're also seeing weakness. And you'll notice up here, this is where the market usually tops out around 29,800 or so. Maybe we might get one more blow off top push, but this is where the TBO helps us out a lot. There are so many charts that are massively overheated to the point where we could go higher, but we are statistically closer to the end of this everything up rally. For the Hang Seng, for Shanghai Composite, for the Nikkei, for the S&P, as well as for crypto, which we know has been already unraveling. Now, the main question we have to assess is how will gold react? Has gold been negatively affected by bear markets? And the answer is yes, of course. We've been conditioned to believe that gold will go up and to the right forever. Notice how cocky Peter Schiff has gotten, again, to pick someone out of the top of my head, who's just a gold bug. Everyone that loves gold right now is totally ignoring the fact that we just had a massive 8-week parabola of 30%, which sounds like nothing. This is literally a sneeze or a hiccup in crypto. But for gold, this is a massive move up higher. If we have more turbulence, geopolitical unrest, financial instability, gold can go up higher. It really can continue to push up higher. But the reality is that it's starting to show cracks of weakness. Again, maybe it's just a short-term pullback. But let's go back a little bit to see how has gold reacted in previous bear markets. Well, first we have to identify the first big pullback that we had. So back over here in January 2022, we saw the S&P fall down about 24% over 41 weeks, December to October. Let's go to gold, December 2021. So December 2021, actually in August, it already peaked. Or December 2021 is over here. So it actually increased for 10 weeks, which feels really, really great, until it didn't, and it rolled over. Now, where has it gone? Obviously, we know it's gone up. But no, gold is not immune to bear markets. It's also not immune to blow-off tops, which is where I believe that we are heading for gold. Just because we had a blow-off top does not mean it's the end of everything, but we should be cautiously understanding that the fact that gold looks like Bitcoin did back in 2016, 2017's rally, and if you don't remember what that looks like, clearly, where were you? What were you doing with your life? Let's go back over here to 2016. Bitcoin's price action looked very similar to gold, where it just kept moving up and up. Just had these massive, massive parabolic moves from the November 13th up here, 5 weeks, 235% increase. We're not going to see that for gold. This is Bitcoin. It was much lower market cap then when it was just at around $19,000. But understand that this price action looks extremely similar to what gold looks like today. It's pushing up higher and higher. Everyone is super duper confident that it's going to keep pushing up. But the problem is that, yes, short-term gold might push up because we're seeing some instability with the stock market, but don't expect it to be your safety raft. So what do we do? Well, the two things that we can do are to consider short selling. Now, there are links down below to exchange partners where you should definitely sign up and use those links to be short selling. I've already made some videos as well on the Coin Bureau trading channel talking about short selling and how I use it to hedge my portfolio, which is the real reason why you should be using it. But the reality is that if you've never done it before, there's no reason why you should start experimenting now. While I still firmly believe that Bitcoin will be heading a lot lower this year, again, I still think it's going to be heading down here to like 35K by the end of the year, which is probably going to be somewhere over here in October or so. It doesn't mean, oh yeah, we're just going to open up a massive short right now and just kind of cross our fingers and hold it open, because there are fees to consider, there's risks to consider, there are surprise moves. Again, we're just basing everything off of this gap down right now, which feels pretty scary. Yes, there are bearish reversal signs happening for the TBO, for TBT Bearish Divergence, for RSI, for a lot of other different tickers. But the reality is that this could also just be over in the matter of a day or two. So I'm not recommending for anyone to open up a massive, taking out a loan on your house to open up a massive short on Bitcoin or anything like that. But there are some clear signs that weakness is at play. While gold has historically been a safe haven asset, one other option you can do as well for those of you that just do not want to give up your Bitcoin is, depending on your exchange, you can buy gold with Bitcoin, either on Binance, Kraken, KuCoin, Whitebit. Notice that some of these exchanges, though, have some extremely low levels of volume, which you will want to be very much aware of. So if you're trying to convert a lot of BTC for gold, trust me, it's not going to go well if it's on a super duper low volume exchange. You'll basically have a fat finger order. When it's like Binance, then it basically is a 30-day moving average of 7.8 Bitcoin per day. So you can handle a lot more volume here compared to KuCoin. Kraken is a little bit better. Whitebit, I have no idea. It's actually a lot better than KuCoin. So that's one thing you could do if you don't want to sell your BTC. But you have to understand that, yes, things are going up right now for gold. Yes, things are still super duper bullish. Yes, it could actually push up higher. But don't think of gold as this escape hatch that's going to weather the storm. If everything starts to go down, it will eventually have a blow off top and it'll fall like everything else. You want to make sure that you have some capital free and you have some stink bid orders, especially from crypto. If you learned anything from what happened just this week, if we go to like XRP on the daily time frame, you'll notice that XRP had this massive lower wick right here, 6% or whatever. Actually, Pi won the day because Pi had a crazy stink bid down 25%. You can still trade crypto, but we should be preparing for more downside instead of more upside for the short term. Maybe we might get one more flush down. I don't know necessarily about this chart, but understand that things are starting to look a little bit sketchy for S&P Futures. So if the market opens quick and it opens red and we see a big increase in the Dixie, we see more downside continuation for the S&P, which should also trickle into the Nikkei, which should trickle into the Shanghai Composite and the Hang Seng. A lot of these are going to have some joint pain together as the world is going, no, not again. Do I think Bitcoin has a future? Absolutely. Do I think Bitcoin could hit $500,000? Yes. Someday. But am I itching to buy Bitcoin right now while there's the threat of possibly having drawdown up to, I think it was like 60% from the current price? Yeah. No, I'm not really excited about taking a long here on BTC. It's possible, but no, I think I'd much rather wait. Ultimately, you have to make your own decisions. I wanted to share a bunch of different charts with you to show reasons why I believe the S&P is going to go into a bear market this year. I didn't even talk about the yen and the Bank of Japan decoupling. Dan on the Coin Bureau trading channel actually talked about that. And I know I'm talking about a lot of videos on that channel, and you're on more Coin Bureau, but it is related because it's all part of the Coin Bureau network, I guess you could say. These are important things that are happening right now. The other thing I want to remind you at the very end of this video is that you do not want to give in to panic. When there is panic in the streets, that is when you buy. You also cannot be afraid to take a loss, even if it's bigger than you expect it to. There's also no reason that charts should all of a sudden just go up and to the right and recover and bounce, especially with lots of uncertainty, fear, uncertainty, and doubt literally on our doorstep. Understand that you've got to take control of your portfolio. So this is the moment of truth for Bitcoin, but also for the S&P, also for the Nikkei, also for gold. This is turning out to be quite a month so far. But again, I've been telling you, 2026 is a bottom year. For those that might have missed that video, I need you to watch this next. It's really going to help you out to understand where we're headed, why we're heading there, and what to expect. And I've also made videos as well about what coins I'm interested in purchasing at the bottom of the bear market. So first, watch this one, then you can watch that one later, okay? So until the next time, you know what to do. Stay awesome and stay in the green. Peace.